There is so much bad tax advice, especially for authors. This video, I want to cover 3 areas that I keep seeing bad tax advice on that specifically impact authors, or questions that I've gotten, or just misinformation that I've heard. Now, this is the second time I record this video because the first time I did it without the microphone on. Right now, there are people jackhammering concrete outside. We're going to test out just how good this mic is. But yeah, there's tons of bad tax advice. There's people who just say things on the internet that are just not true. And I don't think all of it's nefarious. I think a lot of it is just a misunderstanding of how tax law works and what the tax code actually says about things and how much leeway we have within the tax code. But I do think that some of it is a little bit nefarious. Like Grant Cardone says just the most outrageous things on his videos when it comes to tax advice. And I think a lot of it is on purpose. I think a lot of it is meant to get people to comment saying, no, that's not how this works, or to stitch the video and then do like a reaction video to it, so that he gets more views, so that the algorithm picks him up more. And I just don't think it's right to misinform people and put out disinformation just for the purposes of getting more views. I don't think it's right ever to put out misinformation for any reason, but especially not like for personal gain. So while my stuff might not be like as sexy as some of these people who are saying just the most outrageous tax advice out there, you can at least know that it's true information. It's correct. So let's get into it. The 3 areas, I want to start with personal expenses, or like personal image, personal brand stuff. This would be makeup, hair, clothes, anything that you feel is a business expense because it supports the brand that you're trying to build. So here's the argument. I get on camera, I get on Instagram, I get on stage, whatever the case is. And as an author, I am the brand. Everyone follows me because I am this author. And as this author, I always have my hair fixed this way, or I always have my makeup on this way, I always wear these kinds of clothes. And because I'm showing up consistently on social media and YouTube and in person in those looking that way, that has become part of my brand. And so all of those expenses should be deductible, right? Not necessarily. Whenever you see people saying that those types of expenses are deductible, they're usually leaning on a tax code section called 162A. And they say it like it's some loophole, some like special thing that they just found out about. But all section 162A says is that you can deduct anything that's ordinary and necessary in the course of running your business. Now, I saw one reel where somebody said like, it's up to the business owner to decide what's ordinary and necessary. And that's just not true. It's not up to the business owner. It's up to the IRS and the tax courts. So this is how, like in general, tax code works. Congress enacts tax code. Like they're the legislative branch. They write the tax code. And then the IRS is part of the executive branch. They enforce the tax code. They're the ones who go out and say, like, we think this is how this tax code should be applied. And if you apply it differently than that, then we're going to disallow that deduction. So then if you argue with the IRS and say, I don't agree with you, then it goes to tax court. So judicial branch interprets the code. They say, okay, I see what you're saying, IRS, but we actually think the intent of the law was this. And so we're going to rule in favor of the taxpayer or in favor of the IRS. And whenever that happens, that's almost like the top level of support that you have, because it's gone through all the different channels and the courts have decided this is the way that this code gets enacted, or this is the way that this code gets applied. So we have tons of tax court cases surrounding these types of personal expense, personal appearance expenses, haircuts, clothes, uniforms, that kind of thing. Tax courts are extremely clear that anything that is suitable for public use is not a business expense, even if it's required by your employer, even if it's required by your business, even if you only ever use it for business purposes. If it could be used for personal use, then it is not a business expense. So I'll give you an example. These shirts, I wear plain t-shirts for every one of these YouTube videos. I started it out not on purpose. It just happened that way. And now I kind of like it. And so for consistency purposes, every time I record one of these videos, I'm wearing one of these solid color plain t-shirts. Based on Instagram tax advice, I could say, oh, well, these shirts are my YouTube shirts. And so these are the shirts that I'm going to use for business, and I'm going to write them off. That's not how that works. I could very easily wear this anywhere else and it would be perfectly suitable for public use, for personal use. And so they're automatically not deductible. Now, If for some reason I decided that my personal brand was that I was going to get in a chicken costume and give tax advice on the internet in a chicken costume, can't necessarily wear or shouldn't wear a chicken costume out in the public. And so that wouldn't be suitable for public use. And so that could be a deductible expense if I could argue that it's necessary for my brand and show that like that's what I did it for. Another example, I do a lot of conferences where I speak, and whenever I speak, I typically just wear the same sports coat that I wear every single time. That sports coat could be worn anywhere. I could wear it to weddings, I could wear it to church, I could wear it to nice events, whatever. I can't write off the cost of that sports coat, even if I only ever wear it on stage. Now, on the other hand, if it was like a bright green covered in dollar signs and had lights and everything else, was super tacky, then I could argue that it's not suitable for public use and so that it is only a business expense. And in that case, I could just write it off. Here's kind of a vulgar example. There was a stripper who got breast augmentation and tried to write it off on her taxes. The IRS disallowed it, so she took it to court. She went to tax court over it. The tax court actually allowed the expense, but here's why. Be delicate here. The implants were so big, like, I don't know. I don't know numbers or letters of these things, like let's say triple H or something stupid. They were so big and just outrageous that the tax court said that there's actually no personal benefit from having these. And if anything, there was a detriment because it looked ridiculous, in their eyes. It caused like all kinds of back issues and things like that. So there was literally, they couldn't see any personal benefit that was gained from them. And so they had to only be business related. And so they let her write it off. And so that's the thing. If it can be used for personal use or any kind of personal benefit, then it's automatically not a business expense, even if otherwise it would have been a business expense. Okay, next is research expenses. So this is super common with authors. You take a trip in order to see a certain area and be able to take it all in because that area is going to be in your book. Those could be deductible, but it has to actually have been a trip taken for research purposes. It can't just be that you took your family to the beach and then, journaled some notes about how pretty the beach was and said, maybe one day I'll write a book with a beach scene in it. Or maybe even you have a book with a beach scene in it later and you claim that that beach trip was a business expense. It has to legitimately be, hey, I'm writing about this area of the country that I've never seen before, this type of landform I've never seen before. And you're going specifically for that. And you need to have the notes to support what you saw and what you did and how it ended up in a story or in a book. I'll give you another example, another tax court case. I think I actually talked about this case in a prior video, but there was an author who wrote about brothels. He had a character in his books that was going to brothels, and so he decided he needed firsthand experience to be able to write that. He flew to Vegas where there were legal brothels. He attended those brothels. He partook of their services. He took copious notes on the interviews, on what happened, on who he spoke to, on how everything went down. And then all that ended up in his books. And he could point directly to say, like, this ended up in this story, this chapter, this page, whatever. He wrote off travel and research expenses on his tax return. The IRS said, nope, can't do that. He took it to court. The court said, well, actually, he has the documentation to show that this was a business expense. And so we'll allow the travel costs because this was legitimate research expenses for his business of being an author. The problem was they did not allow the payments to the brothel for the services rendered because they said he got something personal in return for that payment. So it wasn't because of the nature of the services. It was because he got something from it that they automatically became non-deductible. It's kind of the same thing as with the personal appearance stuff. If there's something that otherwise would have been a business expense, it's ordinary, it's necessary, you need to have it, but it is personal in nature or you get any kind of personal benefit out of it, then it automatically becomes not a business expense. I'll give you like a more tame example. If you are writing a story and one of the main scenes is that someone is skydiving and you decide you need that firsthand experience, if you travel across the country and seek out like the top skydive instructor and you take them to dinner and you discuss skydiving and you interview them, you write down all the answers and you take notes and you show how what you learned from that interview guided how you wrote the book, I would say that all that would be deductible business expenses. But if you did the same exact trip, but instead of an interview, you actually went skydiving, then the cost to skydive, I would say, is probably not deductible because you're getting some sort of personal benefit out of that. So, personal benefit means no business expense. I hear the jackhammer starting up again, so the rest of this video may end up getting cut out. We're going to see how this mic works. The last thing I want to talk about is royalties. You sell books on Amazon, you get paid, those are royalties. But royalties mean something very specific in the tax world, and they're taxed differently than business income. I'm not going to go into all the specifics, but just know that business income is subject to self-employment tax, but that also gives you Social Security and Medicare credit. Business income also means you can write off certain business expenses like self-employed health insurance, whereas you can't write off certain of those expenses with royalties. So I have seen a lot of author tax returns where the income from Amazon is being reported as royalty income on their tax return, and that's just not correct. It needs to be reported as business income if you're a self-employed writer. I've seen this so many times that I looked up the source for this, and it is abundantly clear on the IRS website. Like, it's almost more clear than anything else I've seen from the IRS. Usually the IRS speaks in vague terms, like in general and this and that, and you kind of have to figure out if it applies to you. But there's a line on their website in one of their publications that says, if you are a self-employed writer, then royalties should be reported as business income, not as royalty income. Like, it couldn't be more clear than that. So the only exception to this, I think, would be if you're not a self-employed writer, but you did write a book. So for example, if you wrote a book one day and you put it out into the world, but that's not your business, you do something else. You have a day job, you have another business, you're not actively promoting the book, you're not actively advertising the book, it's just sitting in the background and it generates a few dollars of royalties for you. I would argue that those are actual royalties. You're not self-employed as a writer. But if you're watching this video, if you're subscribed to this channel, you're probably a self-employed writer. You're learning about the business of being a writer. You're trying to make money from your author business. You're advertising your author business. That royalty income, or income from if you sell on your website direct or anything else, is going to be business income. It's going to be subject to self-employment tax, but you'll also be able to deduct your business expenses against that income. So, moral of the story is, just because someone says something online doesn't make it true. Just because I say something online doesn't make it true. Check the facts, check the source. And if you're not sure, just make sure that you have someone in your corner that you trust to actually do the research and help you write off as much as possible without getting you into trouble with the IRS. Now, before I go, I want to tell you about something I'm really excited about. Jessica and I have started Author Unlimited. Author Unlimited is a community for writers who are treating their writing as a business and want to grow that business. In that community, I'm giving financial advice, tax advice, business advice, and Jessica is giving all of her resources on like her automations and lists and everything that she does to run her author business. We're planning bookkeeping and finance days, Q&As, book clubs, office hours, and lots of other cool stuff there. So if you want to check it out, check out the description in the link. Check out the link in the description and join if you're interested. The price, I think, is set at $29 as of right now, but it will be going up as the group grows. So if you get in at the $29 price, it's going to be that price forever. So make sure you join that and check us out there. And I will see you later.